All right, Colin. Imagine, if you will, a company built around a controversial, magnetic founder, a guy who genuinely believes he's going to change how human beings move through the world fundamentally. The kind of founder that makes institutional investors nervous and excited at the same time. The company is private for years. Valuations climb 18 billion, 40 billion, 68 billion. Each round bigger than the last, fueled by sovereign wealth funds and the biggest names in venture capital. Everybody wants a piece. SoftBank alone writes a check for $7.7 billion. Okay?
Okay, I'm following.
They like to throw money around. Not a big deal for them. But do you?
Do I
want to throw money around at this crazy idea? So here's the core thesis. Take one of humanity's oldest obsessions, the desire to move faster, farther, more freely, and reinvent it entirely. The founder has been called a genius and a fraud, sometimes in the same article. There are regulatory battles in basically every market they enter. When they finally go public, it's one of the most anticipated IPOs in a generation. Would you invest in this company?
No.
Well, if you did, you could buy it right now because it's Uber.
I knew it wasn't going to be SpaceX. I knew you weren't going to make it too easy on me.
Uber.
Yeah. You want to know what I was thinking about the other day, actually, with Uber is I was actually thinking about just rental units in general and how everybody like throws a stick up about, well, what happens if you have a bad renter? Like, what happens if this happens? You know, you have like all these things can go wrong and blah, 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 blah.
For Airbnb.
For Airbnb in general, or just rental units in general, just anything involving a house.
Yeah.
And I remember when Uber was becoming a thing and people were like, why would you ever get into a stranger's car?
Right.
Like you are signing yourself off. That is so dangerous.
Yeah.
Everybody out there is trying to kill you. No one believed in Uber. Now, not every single country, most developed countries have Uber at this point.
Yeah.
We use it when we go to Europe constantly. I have never once thought about it ever again. I mean, sure, there's safety things that pop up in the same way that people can break into your own house, you know, but I remember when this was so controversial.
Yeah.
When it was coming out that just like no one believed in it.
Yep. Yep. And it was one of those companies where like it was easy to hate them too. And so you'd have like, you had Lyft was basic. Lyft existed to be like the nice guy version of Uber, right?
Yeah.
Like it's the safe kind of good. It was like, they had a bad reputation.
Correct.
Right?
Yeah.
And they solved that by getting rid of the CEO.
They did.
And now it is kind of like prevalent. It's everywhere. And it's like, I guess to your point, like traveling, Uber's with you everywhere. Like I can go to Vermont in some places, not all places, but in some places I can still get an Uber. I can't get like a yellow cab.
Sure.
Right.
Yeah.
So Uber debuts IPOs, right? The day after the IPO, it was down 7%.
Okay.
So you're better off waiting one day. 6 months later, it was 40% lower, right? A year after it debuted, 68% lower.
I remember this.
Yeah. It was not a great trajectory. The stock has since recovered. It's up 84%.
When did it IPO?
Uber was 2019.
2019.
Uber debuts in 2019. So to be fair, a lot of things happening there, right? Because Uber debuts in 2019, a year later, it's COVID. So like, a lot of stocks were down.
Yeah. Right? And no one wanted to get into someone else's car in fear of COVID.
So it's not the fact that it was down 60+% a year later that I think is interesting. I think it's interesting that it was up or is up as of this recording about 84% since it IPO'd, which is pretty good, except the S&P in the same time frame is up 172%.
It's dramatically underperformed.
Yeah. So what are your thoughts on IPOs, Colin? Welcome to the Compound Growth Podcast with Colin and Wheeler, where we talk all things growth, from financial growth to career growth, personal development to societal progress. We explore how each layer builds on the next, compounding over time to shape who we become. Each week, we break down complex ideas and emerging trends into clear, actionable insights. Because growth isn't just about numbers. It's about understanding the world and our place in it.
Well, I have a lot of thoughts on IPOs. I think where we should probably start is what an IPO actually is.
Educate us.
Yeah. So IPO, initial public offering, a lot of companies, actually the majority of companies in the US and globally are privately held companies, meaning that they're not open for public investment. when IPO happens, that is the first time a company is becoming available for purchase on the open market, whether it's the NASDAQ, S&P. It's on an exchange that you can purchase and own shares of that business.
Right.
So that is what an IPO is. Where things get really opaque are the questions that people often ask us. I remember Rivian was the most recent big one for me that most people were asking me about, like, should I get in the beginning? Do I need to buy shares of this? Like, I think it's going to go up. And the question is why do you think it's going to go up? Because there's no track history from a stock perspective. As of, before the IPO, it's all privately held shares. You don't have access to all of the financial information. You have some of it, but when a company IPOs, that means that everything is now available for view in terms of the financials, the projections, cash flow, all that stuff is now available to the public for research.
Well, and that's what destroyed WeWork.
Totally.
Right? Because WeWork,
once you open up the once you open up the books, you're like, oh my God.
Yeah. They're like, wait a second.
Yeah.
And then there was no real, the IPO was delayed for like years until it eventually SPAC'd, which is a whole different ballgame.
We get into that. Yeah.
So I think the IPO, to your point, is when you get a public valuation for a company that was private before. And then that becomes an opportunity for the mass public to invest. And then it also becomes the opportunity for the mass public to lose money.
Yeah.
Or it becomes an opportunity for the people who were private to get out, right? They had the stock when nobody else could, and now they get to do something else with that money. And more often than not, and this is why people have always been excited about private equity, more often than not, the IPO price is higher than whatever the private price was, right?
Totally.
It's an opportunity to raise money. That's why the company is doing it. To make money.
Yeah, exactly. I mean, a lot of the ways that companies grow in the beginning stages is by taking on investments from private equity. So people write them a check, they put it into their business, hire more, expand, whatever it might be. And then eventually they get to the point where they need more money than the private investments that they've received. And a good way of raising more cash is going into the stock market, because you are going to receive a good chunk of cash flow from coming in from the open market.
And the people who've been private and seen their net worth increase, their investment increase, now have an opportunity to liquidate. Right?
100%.
And get out of that investment.
Yeah.
So why are we talking about this right now?
Well, there's three big reasons.
Yeah.
One big one.
SpaceX
is the biggest one.
Yeah.
But then we also have Anthropic and OpenAI.
Yeah.
So three of the biggest IPOs in history are on the docket in the future. SpaceX is the imminent one. Yeah. In theory, Anthropic and OpenAI will be coming down
pretty massive
at some point. Exactly.
You know what's interesting to me? So SpaceX, the talk is $1 trillion valuation. Right?
I think saw 1.7.
Okay. Let's calm down, everybody.
That's what I saw.
We're taking a company that's valued at like $650 billion right now.
Yeah.
To your case, doubling it, right?
Yeah.
Just by going into the public market. $1 trillion is a lot.
It is.
I asked
some walking around money.
I asked one of those other IPO candidates to put that in perspective for me.
How much $1 trillion is?
How much $1 trillion is? Just the number $1 trillion. And here's the fun part I took away from that. 1 million seconds is 11.5 days.
Hang on. Pause. 1 million seconds, 11 and a half days.
Yes.
Okay.
All right. 1 trillion seconds is 31,709 years. All right. So that is larger than human history. All right. So if you spend $1 a second, you could never, ever spend all your money.
How much was it in years?
31,000.
31,000 years.
709. Almost 32. You want to round up. Yeah.
So basically, humankind has been around for 15 to 20,000 years.
Yeah,
in theory. That was going back to like when we were cavemen. Yeah. But still, that's wow. Yeah. That's like shocking. I always love the analogies too of like the skyscrapers.
Right. Yeah.
Like $1 million stacked up is like 4 feet versus like, $1 trillion goes like above the, exactly.
1 trillion miles was another one. It was like 11 round trips to the sun or something like that. It's like $1 trillion is a lot. It's a lot. And it's really hard because like, I feel like we anchor to these numbers when we're kind of like growing up. It's like, I wanted to be a millionaire. And maybe that's not just growing up. That's just like human history or Americans kind of growing up. But it was like $1 million. And then you have the Dr. Evil.
Why make billions when we can make millions?
And now we're talking trillions. Honestly, it sounds surreal. It sounds kind of fake. Right?
It does. Well, what blew my mind about this was, and we'll talk about this more at scale lately, and I might be jumping ahead here, but the total US stock market is $48 trillion.
Yeah.
The total sum of the IPOs that we're talking about on the docket is right around $3 to $4 trillion if you were to total up like all these IPOs that came out.
So are we talking like, so OpenAI and Anthropic both being
too.
about $1 trillion each?
Yeah, so OpenAI is about $1 trillion, Anthropic 6 to 800 billion.
They're no.
It's assuming like 10 to 14 times, which is crazy. It doesn't make much sense. But you're talking about companies that are going to make up a huge percentage of the overall S&P 500 when they come out.
Well, that's another thing, right? So if SpaceX debuts and it's $1 trillion company and it maintains that valuation, which I don't think it will. I think at some point it'll probably dip down, but whatever. Not investment advice.
This is not a prediction. Yeah.
I think about this event and all the various different ripples and impacts it's going to have, including the fact that whether you buy that IPO or not, it's more than likely that a year from now, you're going to have an investment in it, as long as you have an S&P 500 index fund or anything that's diversified like that.
Yeah, you basically can't avoid it. I mean, 53% of all US stock market investments are done through passive investing at this point in time, whether it's index funds or just an S&P 500 mutual fund, or a target date fund.
Yeah.
So if that's the case, and if these 3 IPOs come out, they're going to make up 7% of the overall stock market, essentially. And if that's the case, you can't not own them.
Yeah. Now, there's like certain stipulations, like a public company has to show like a year's worth of financials and be profitable in order to get into the S&P 500. So I think that I'm not going to spoil any of the fun numbers later on, but when we were digging into the success of some of the IPOs of the past, like one of the differentiators, one of the variables that was most important was whether it was a profitable company coming into the IPO. And I think what's kind of tricky with SpaceX is the fact that it's like right now it's like 2 different companies, and then kind of 3, and then kind of 4. Because I'm sure the scuttlebutt is essentially that Tesla will be absorbed into SpaceX and it will all be one company.
Well, that's the big question. And so you have SpaceX, which is obviously the rockets. Then you also have Starlink. Yep, I almost said data link. Starlink. And then what's the third one?
XAI.
That's what it is. Yeah. Okay.
Yep. And then, of course, Tesla already absorbed a solar company, right? So,
First solar.
There's a lot of different arms to the business, which is not a bad thing. But like when you track just SpaceX right now, what's profitable? Starlink is massively profitable. XAI is not, because no AI company is really like making money right now.
No, it's just all a spend.
Right. And so then there's the rockets, right? And how profitable kind of like that section of the business is.
And that's a big question mark.
That's a very big question mark in my mind.
Yeah.
But I just said XAI is unprofitable because AI is just like a massive spend. Is OpenAI going to be profitable? Is Anthropic going to be profitable?
I don't know. I doubt it.
Yeah.
Do you know, you might be gonna get into this later. I don't know what you have in store for us. But do you know the largest IPO in history?
I do. It was a Ramco.
It was a Ramco.
Yeah.
And that was it was 1.7 trillion, I think was the valuation for that when that came out.
Was it that high?
I think it was that high.
Wow.
Yeah. But it was also making like several $100 billion a year in output. Like it was so profitable that it justified the IPO price.
But that was also not S&P. I mean, that wasn't listed in the New York Stock Exchange.
No, it wasn't.
NASDAQ.
Yeah. And it was the largest one because it kind of deserved the valuation, a lot of people would argue. And I mean, on top of that, it was basically backed up by a country.
Yeah.
You're investing in a country at that point. But these were talking about such high valuations.
Yeah.
SpaceX is debatably profitable.
Debatably.
And I
misspoke earlier because it said 650 billion, but I think it's 350 billion in private valuation right now.
Yeah.
So we're looking to triple that.
We are.
That's nuts.
Yeah. I know, it is insane.
Okay.
I don't know. It's going to be very interesting to see where this all pans out. But long story short, it is, I think, in comparison, Facebook was the largest tech IPO to have ever come out.
Mhm.
You know, I think it was
Well,
2012.
there's Alibaba too, which was
Oh,
massive.
Alibaba. Yep.
Yeah.
But I think IPO when that came out, that was like 120 billion.
Yeah.
So we're talking companies that are over 10 times the size of Facebook in terms of IPO valuation.
Yeah. So, okay. So SpaceX, let's say that the rumor is June is when we'll see SpaceX go public.
Right.
Right. So
Yep.
SpaceX goes public. What happens right off the bat? You and I have an opportunity, you and I and everybody else who's an individual public investor has the opportunity to buy the stock, and they have a choice to make. Do I buy it or do I not? You also could just ignore the whole situation and just continue being passive. But outside of just the public investors and the impact on that one little decision, there's the fact that they're going to be forced buyers within a year, probably.
Because of passive investing.
There's the liquidity that comes into the market from everybody who's selling, right? They've been private and now they get that liquidity. And then if you're going to, so we're going from a $350 billion valuation to $1 trillion, let's say, or 1.2, 1.3, 1.7 maybe. Where's all that money come from?
Well, it has to get sold from somewhere else.
Right. Or it comes from cash on the sidelines, maybe.
That's possible too. It could come from the fixed income market.
But it's a lot of cash on the sidelines. It's a lot of fixed income. It's a lot. Let's say that you're an investor and you're excited to buy SpaceX, but you're fully invested. What do you sell to buy SpaceX?
Well, the other thing too is that if this is going to come a lot from passive, it can't necessarily come from cash on the sidelines. It has to get reallocated from stocks that are already in the index at that point. Because it's not like S&P has, billions of dollars on the sideline. It's just an index that tracks and diversifies. And then on top of that, if we have another, let's say, $3 to $4 trillion coming into the index at that point, the concentration then also picks up at the top. Now we're talking over 40% concentration in the top 10 stocks too. So it would have to get pulled out of somewhere.
Well, and the S&P wouldn't decide to decrease concentration. They're just going to reward the largest company for being the largest company.
Right, because it's a momentum play.
Right. But if you're an individual investor, and let's say that you're an individual investor who loves Elon Musk, and you're probably a little heavy in Tesla because of it.
Absolutely.
Well, now are you going to be, you have two choices in that situation. You can either buy SpaceX and hold Tesla and have even more Elon Musk exposure.
Yeah.
Or you can say, well, I want Elon Musk exposure, but maybe I want it in SpaceX and not Tesla. Is this a risk to Tesla stock?
It could be, but at the same time, I would argue that they're very different companies.
Oh, they're definitely very different companies.
So it's I get that Elon Musk runs both of them, but the revenue streams are detached for now.
Yeah, until they're not.
Right. For me, I would love a piece of Starlink. That to me has so much potential out there right now. I'm sure the rockets have a lot of potential too, but I just don't know because it's not you just don't know. It's a big question mark at the moment.
Well, Dan and I were talking about this yesterday because he was asking about Comcast. And I said, Dan, go back to the corner. But I mean, if you're thinking about broadband right now, because that's the big build out at the turn of the century with infrastructure for the internet was broadband build out. We never used any of it or didn't use most of it, right? There was a ton of just dark fiber out there that never got used, right? Yeah. We laid all this fiber. Now everything's above us, right? You have Starlink up there in space. You have Amazon doing their own Starlink type thing now because they just bought, I forget which company it was they bought. Is that the new race? It makes sense. If you think about it, we've been going more and more wireless in life, right? And yet we still rely on fiber cable to provide that wireless feed. Will we just be relying on a satellite network to do the same thing?
I mean, I can say, building a new house, I had to pay a pretty significant, I haven't done it yet because I'm actually considering going with Starlink. Yeah. But I have to pay a pretty significant amount of money to run the cable up the driveway to my house and connect it. So it's not like a free service necessarily versus I can just pay Starlink. Yeah. And just have a little portal on my house somewhere. And it's now $35 a month.
Is it really?
I just got pushed a thing, $35 a month.
Wow. For I
think it's a promotional rate.
Yeah, a period of time.
Yeah, but still, I mean, that's not bad that's actually very cheap for solid internet.
I just paid $85 for my new promotional deal with Comcast.
Right. So that's the thing. And then on top of that, I mean, there's no reason why at some point Starlink couldn't also move into cell phones.
Yeah. Well, fair.
Unlimited service everywhere.
Yeah. Do you know where the X comes from for SpaceX?
Is it like Apple with the I?
So Elon had X.com way back in the 90s, which became PayPal. So X has been a part of this guy.
Really? And now it's actually X, which was Twitter.
Now it's Twitter. The guy can't get away from it. Like, he really loves X. There's some sort of psychology.
Well, that's a crazy domain name to get.
That's true.
There's a lot of value in that.
Yeah. That was probably like a start. He probably bought the domain name and then he was like, what can I do with this?
I'll just apply it.
Yeah,
rinse and repeat.
I think of SpaceX as this potential like massive value, like just like vacuum of liquidity. Like, it's just going to suck up all the liquidity in the market because that's a lot of valuation that you're adding to the total stock market all in one day.
Yeah.
Right? And I think theoretically that could have some ripple effects on other stocks that are owned. Could also be bonds, to your point, or it could be just money market funds. Like, something is going to be sold in order to buy this stock. And then it will happen again, perhaps with OpenAI, with Anthropic. We're not even talking about Stripe, but Stripe is one of the largest private equity investments out there that has been private for so long, and they're just waiting in the wings to figure out the right time to go public.
Yeah. Well, if you go back to 2021 was the biggest year in IPO history. There were more companies that IPO'd in 2021 than ever before. And the total market value of all those companies that IPO'd in 2021 totaled up to $900 billion.
Yeah.
So we're talking, and that was over 1,000 companies. So I think it was like 1,020 companies IPO'd in 2021. Now we're talking 3 companies have 3 times the market cap than over 1,000 companies that IPO'd in 2021.
Yeah. Well, I mean, are you paying for quality? Right?
That's the question.
That 2021 vintage, let's look at it. 2021 vintage. The worst vintage in my sample. Vintage being like wine.
Sure.
Right? You're with me.
So you're talking like market basket.
Yeah,
low
like
shelf
IPOs that debuted during a certain period. So, for example,
like a Moscato, like something that's just sugar.
This is boxed wine at Trader Joe's.
Trader Joe's has some good wine.
I know, but the boxed wine, whatever. Okay,
a bad vintage,
fine. You know what? Everybody loves their Trader Jose's until they have.
We're talking different. Gas station wine.
Okay, gas station. Here's the gas station wine of IPO history. I don't think so.
I don't know if you.
I got to tell you, actually, in the craft beer world, gas station beer is really good stuff. Like, there's you find really good craft beer in gas stations in Vermont.
Well, there you go.
So, anyways,
yeah, but you're in Vermont.
2020. Shut up! I love Vermont.
Okay.
The ZERP bubble, 2021, the worst vintage, near universal failure. 90% decline. Coinbase, 85% decline. Robinhood, 82% decline. UiPath, do you know what UiPath is?
Never heard of it.
Logistics. It's AI logistics. It still sucks. 83% decline. Bumble.
Oh my God, I forgot about that.
Bumble, not good. There was something called Amplitude.
Pretty much all my friends, that's where their paychecks are going from sports betting. And sports betting.
I know a lot of stocks. I've never heard of Amplitude.
Nope.
Down 80%, whatever it is. All right. So you compare that to 2002 to 2006. Had Google, Salesforce, MasterCard, right? Chipotle IPO. 2007 to 2009, even during the financial crisis, Visa IPO'd and Lululemon IPO'd, and neither of them dipped below their IPO price.
Hit us with a fun fact about companies that have IPO'd and been positive.
So we did some research on this. It was fun. The parameters were this. Since 2000, companies with a minimum $100 million market cap at listing.
So no penny stocks.
No. There were no thousands of IPOs. It's just there's a bar of entry, area of entry. No SPACs allowed. So no WeWork, no Chamath, Palihapitiya SPACs, SPAC king guy. And we're only looking at closing price, right? So with those metrics, 114 notable IPOs on the list.
Okay, so from 2000 to now, $100 million market cap and up, 114 companies.
And then we looked at their performance through last year, through 2025. how many of those 114 IPOs stayed at or above the value that they debuted at, meaning that they did not drop below their debut value at any time on a closing price? It may be intraday, maybe like at 12 o'clock on the third day of their IPO, they might have. But
okay, so basically what we're saying is from 2000 to now, which companies remained positive after IPO?
That's correct.
Okay.
And never fell below
that IPO price. So basically, it was a profitable investment from the get-go.
Yeah. Now, if you expand this universe to like all IPOs in the US stock market, the likelihood that it would fall below IPO price was like 85%. It was high. If you have this $100 million market cap parameter on there, it's like a 50-50 shot that it doesn't fall below its IPO price.
At open?
Well, no, not at open, ever. Meaning like,
okay.
So SpaceX debuts and, I call you up and say, Colin, should I buy SpaceX? And you're like, I don't know, maybe today, maybe tomorrow, maybe there'll be a better time down the road. There's a 50% chance that there will be a better time to buy that than the day that it IPOs.
Okay.
All right. It's actually 53% chance
that
it'd be better. So some of the names that have never fallen below their IPO price. So Google, MasterCard, Chipotle, Visa,
really?
Chipotle, even with the salmonella thing, never fell below its IPO.
I would have thought it would have dipped with the salmonella thing.
Shopify, CrowdStrike, Datadog somehow didn't fall below its IPO price. And
wow, that's shocking to me.
All over the place. Yeah. But what's interesting to me is the sectors that have done the best, right? So sectors of the stock market, right? If you debuted as a cybersecurity company, there have been 8 of those since 2000. None of them fell below their IPO price. So that's great.
Above 100 million market cap.
Yeah.
Wow.
Yep. If you're a consumer staple or consumers just in general, consumer discretionary, more likely to drop below 60% of those have dropped below their IPO price.
Wow.
So names like, let's call it Peloton, Rivian, Poshmark, Blue Apron, Stitch Fix.
Blue Apron, forgot about them.
A lot of those were in that kind of like 2021 vintage era.
Yeah, that didn't do so hot.
Some of them were pre that, but then they just, they got so inflated during the COVID run up that, anyways. Financial services, not so good. Healthcare, not so good. Industrial is only one name that qualified to even make this list. It was TransDigm, which, don't worry, you don't need to know about that one. SaaS, pretty good, 80%.
Oh, wow.
So what is SpaceX?
I could argue it's consumer.
I would say that there's a chance that it's consumer, right? Because we literally just said that Starlink is their most profitable division.
Is a part of it, though. So, XAI. So it could be SaaS.
Well, is it though? Okay, so let's talk about OpenAI and Anthropic. The biggest difference between those two is OpenAI is basically straight to consumer.
Right.
And Anthropic is enterprise.
Right. Enterprise level.
What is XAI?
I don't know.
Is it I don't know anybody that uses Grok. I gotta tell you, I don't.
Neither do I.
No idea.
No, I actually do know one person, and he's a doctor, and he is very, very conservative.
Okay. Oh, like just like that's his tilt.
That's his thing.
Then,
yeah. So he just leans into it.
Yeah.
Out of all the people I know, that is the only one.
Yeah. I feel like it's consumer facing. So let's say that XAI is consumer, and let's say that Starlink is consumer.
But you have the rockets and Starlink Starlink can also be enterprise.
Yeah, that could be. Yeah,
I
don't know how much of their revenue comes from enterprise,
but it's also government.
There's that too. So there's government contracts temporarily. Yes. I guess the question is like, where do they fall in this category? I would say that you could look at it either way. That maybe it's not cybersecurity, so you could say it's somewhere between tech, enterprise, SaaS. And consumer.
What would you say Comcast is? Well, people have it as a utility.
Well, because it's both enterprise with what we have for our internet at the office here, but it's also what Dan was bringing up was that it's Peacock, right? It's a streaming platform that he's telling me is becoming more popular. I don't know if I believe him, but
Peacock,
Peacock.
We actually watch Peacock a lot.
I think this office watches too much Peacock.
That's the problem.
So what I was saying to Dan is that I feel like there's no like brand value necessarily. So like I understand that Below Deck has like different variations. Kardashians, Bravo,
Trader. They're traders.
Kardashians are their own thing now, but they were E.
They're
Okay.
Hulu now.
Whatever it is, I don't
Yeah.
think Peacock is exactly Netflix caliber.
No, agreed.
And by the way, that stock has been just demolished. So
Yeah.
so bad.
We'll gloss
Not
over
investment
that.
advice.
Yeah.
But I wouldn't buy it myself. So I think the point here is that the likelihood it's uncertain whether or not SpaceX will be one of those names that goes, and soars and never goes below its IPO price, or, it's maybe a little bit higher the likelihood that it would fall below its IPO price. But either way, the second derivative effects of this are really interesting. And we talked about like all the liquidity that gets vacuumed up from the stock market, right? What you have to sell in order to buy SpaceX, and then what you're forced to sell inside your index a year later to buy SpaceX. But there's also all the money that is being, I don't want to say generated, but if you have a $350 billion company and you, Colin Walker, own a percentage of this, which I'm sorry, unfortunately you don't.
No, I know. Not yet.
Not yet, but you don't own it as a private investor. And then your investment in that, let's say it triples. Right?
Easily, yeah.
Right. Then you have all that extra money. Your net worth has certainly increased. And you could argue that there's
I'll redistribute and redeploy.
You could redistribute and redeploy. Not everybody will. Some people. But let's say now you have a choice. You just tripled your money on SpaceX because it was a private credit company or private equity company. Like that was a special opportunity for you. Do you then go look for a similar opportunity, or do you put that into the public markets?
Well, I'll tell you one thing I wouldn't do is I wouldn't sell it because I wouldn't want to pay the capital gains tax.
Oh, okay. All right,
I would probably take a loan against it, or I would do some sort of long short straddle with a call put option, something like that is what I would do personally.
Yeah.
Because I wouldn't want to get hit with that tax right away. I would look to diversify out of it. But this is the famous Apple CEO salary of $1. And, Tim Cook is pretty much paid predominantly in stock at this point in time, Apple stock. So extremely low tax rate because they take the stock, they put it in an account, and they usually don't sell it. They will take a loan against it, or they'll use some sort of strategy to slowly trim out of it over time while maintaining low taxes. So that's probably what I would do. But I would take that profit and most likely redistribute it or try to aim for some diversification. But I remember, I think it was Mark Cuban famously said, like, diversification is for the weak.
Yeah.
It was just like all like major wealth is made through concentration. Yeah. But at that point in time, I think Elon Musk will probably, if this does IPO for the valuations that they're talking about here, will probably be the first trillionaire in history, most likely.
Yeah.
We'll see how it pans out.
Depending on what pay package he gets approved by some court.
Correct.
But yeah, I mean, look.
But he doesn't, I really don't think he cares about the money at all. I mean, if you look at him, he has very modest houses. He's not a flashy guy. I just think he does it because he likes business and he has his own goals. But if it was me personally, I would not want a tied up in a single company.
Yeah. I mean, there's a large gap decision making between us and Elon Musk, right?
Absolutely.
The type of decisions.
I can't pretend to relate to someone that has hundreds of billions of dollars at their disposal.
Yeah. But you bring up a good point because, first of all, there's the period of time where there's going to be a lockup and you're not going to be able to get out of it right away anyways.
Totally.
Right?
Yeah.
So, at the IPO, after that, there's going to be, depending on when you received your equity and when you continue to receive it, there's going to be opportunities to get out of it, but they're not going to be all at once. So there's also, to your point, how you can leverage that, right? Because you can tap into that value without having to sell. And that can prop up the value of the company because nobody's selling it. Which is great. And still provide liquidity there before. It's just now it's a bank's liquidity that you're taking and borrowing.
Which adds to the fixed income market.
Yeah.
In a lot of ways. But yeah.
There's no way where this exists in a vacuum.
No.
Right? There's some sort of impact that we're all going to experience from this. And I wonder about how much support in the market there is for this. Because if we see SpaceX debut, and it's a great IPO, right? And then Anthropic and OpenAI and Stripe, and those are all great IPOs. That's a lot, to your point, of of liquidity that we need to pull into the market just
It's
to support those
7%
names
of the total value of the stock market.
But then other companies are going to follow. There was a company yesterday that IPO'd. Can't remember what it was now. It was like the largest IPO of the year. I hadn't heard of it. IPOs, they come in waves. Like when there are good financial market conditions, there'll be a bunch of IPOs. And then like the last IPO will be a kind of a loss, not a loss, but just it won't generate what they were hoping for. And everybody realizes that market is dried up. And then, you have to wait for the right opportunity again. How much can we support this type of environment, right? If we have, let's say that it's June and we still are dealing with an Iran war or Strait of Hormuz backup or whatever it might be.
Yeah.
And we have at the same time a new Fed chair, which historically the new Fed chair is always tested, quote unquote, by the market.
Yeah, quite early.
Right? You still have inflation high. You still have the AI risk. You still have private credit risk. Like there's a lot of I wouldn't call them cracks in the markets, but there are a lot of little warning signs.
Yellow flags.
Point to yellow flags.
Yep.
So how much of this can we support? Like how much can the market prop up all these new companies, new valuations?
Well, I don't know, because concentration is something that we've talked about before. And, to go from 30% of the market being in the top 10 companies to now you're at over 40 with these IPOs, if they come out at the valuations that we've been talking about, that's a pretty sizable increase in terms of concentration at the very top, specifically in basically one sector, depending on how you classify SpaceX. So that's a little scary to me. The other thing that I'm curious about is as more and more money kind of flows in, and the valuations become bigger and bigger, the bond market has always been historically larger than the stock market by a significant margin. I think the stock market's around 48 trillion, and I think the bond market's around 55 to 59 trillion. So you have 10 to 12 more $billion at any given time in the bond market. But if more and more companies are starting to come in to, I'll say, the US stock market, is that ever going to get to a point, I wonder, where they're at an even playing field? Because I'll say most people and most 401k investments, most savings in the stock market at this point are going into passive things.
Right. I'm looking at my phone right now because I was just sending out an email this morning about private credit, and I had the numbers of how much is in all of the various sectors or the various investments that you're talking about. So U.S. investment grade bond market is roughly 10 trillion.
Yep.
Fixed income exceeds 50 trillion.
Yep.
All right,
makes
so
sense.
50 trillion in fixed income. Mortgages are 12 trillion. All right, so we have $12 trillion in mortgages in this country. Again, thinking about how much a trillion is and how many houses there are in this country. Like, how leveraged are we? That'd be a fun exercise to see how much leverage there is per house in this country. It's a lot. I was thinking about this. I was going down a Colin type rabbit hole.
Okay.
This was about sovereign funds. And
I love this topic.
Right. And there are some countries that have sovereign funds because they have some nation state wealth that could totally destroy the inflationary or lack of inflationary environment that they carry. So like Norway, for example, right? I was asking, why don't we have a sovereign fund? Why doesn't US have, we have all this wealth in this country. Why don't we have a sovereign fund?
Did you know that, fun fact, I think it was France's sovereign fund was invested in the Bernie Madoff fund?
Jeez. Yeah.
There was a lot of very, very wealthy royal people
that
lost a huge chunk of their money in the Bernie Madoff thing because of, sovereign funds.
Well, there are a lot of sovereign funds that are invested in SpaceX and a lot of our larger companies.
Lucid.
Right?
Yeah.
Lucid.
Yeah.
Jeez, Lucid. Bad IPO, Lucid.
Yeah.
Consumer discretionary right there.
Yeah.
Or tech. You can put it either way.
Right.
So we don't have a sovereign fund, I guess, because we don't need it. We're kind of we're the reserve currency, and we get to, everybody else borrows our money and then pays us back, blah, blah, blah. And I was just thinking about all of this wealth, and I'm well, couldn't we turn some of this wealth or technology into a sovereign fund? And the end result was you need to have a surplus in order to have a sovereign fund. And I was like, oh, what's a surplus?
What is that?
Plus,
what is that word?
But it's, some of the money that comes into this market is going to be, to your point that you were making earlier, just like leveraged, right? It's going to be,
it has to be.
Yeah, it's going to be liquidity that's created kind of like fugazi, like thin air stuff.
Yeah. I thinking about this and what my strategy would be, and knowing how like a lot of super wealthy people kind of manage their money, I know that this has to be leveraged in some way or another, because there's no way that someone's going to liquidate something of that size and magnitude so quickly and pay those gains.
Yeah. So I don't know if you have to have conviction. You just need to have a tax strategy.
Just need to have a tax strategy. You need to have patience.
Yeah. I think it's going to be really fun to see, and I anticipate we're going to have a lot of phone calls about this, and I'm going to advise patience more than anything else.
Yeah, I think that's the only thing you can do, because how can you make a decision based off of no information, pretty much?
Right.
Yeah.
Cool.
Let's wrap it.
Final thoughts, Colin?
I think passive investing has become so big for a reason.
Yeah, so you don't have to make these decisions.
So you don't have to make these decisions. I'm not saying that making these decisions is a bad thing. But what was the stat about, when Ford Motor Company IPO'd, and the percentage of people that own stocks, I think was like 4 to 6% of the populace. Now I believe 62% of Americans own stock in one way or another, whether it's through 401ks or, IRAs or individual Robinhood accounts, whatever it might be. So we've gone from 4 to 6% of the population to 62% of the population. And that will probably continue to grow, which is not a bad thing, because you're participating in the markets and compounding interest, and plug for the podcast and all that good stuff, compound growth. Personally, for me, I think investing in IPOs can be a bit of a dice roll.
I think it's the best way to explain it, is that there are no sure things in any investment. But investing in a company that doesn't have a public track record, to me, is a little bit of like you're throwing caution to the wind to a degree. And there's some sort of FOMO in that. The Ford thing is interesting. This is a fun fact straight from the horse's mouth. Elon Musk shared this. There are 2 American automobile companies that never went bust, never went bankrupt. Ford and Tesla.
That's great.
But the Ford comparison is the one that we were looking at earlier. Like when Ford went public, it was 1 to 2% of the total market at the time. Some regular Americans bought shares. But to your point you were just making, fewer Americans had exposure to the stock market.
Now it matters.
And your K will buy this stock.
You're going to own it.
Down the road. I always think about this because the most important thing to take away from the progress we've made with our markets, I believe, is that they continue to increase in strength and durability because they continue to increase in importance in this country. And if you have contributions every 2 weeks coming in to buy SpaceX, not intentionally necessarily, but just is what it is. These larger companies are going to continue to get this bid because as Josh Brown actually has called it, the relentless bid. It just always keeps coming until something changes. And I don't know what that would be.
Yeah, I don't know, but I don't see it changing anytime soon.
SpaceX could be the biggest and most important company in the world if it merges with Tesla.
That's true.
Right? Like what?
I don't know of anything that's that size.
Be fun to see. All right. Like, subscribe,
share with a friend,
comment. We are in a new studio. Well, it's actually the same space, but we're redecorating. So more to come.
Thank you, everyone.
Bye, all. The information in this material is for general information only and is not intended to provide specific advice or recommendations for any individual. Investment advice offered through Integrated Partners, doing business as Ko-Fi Advisors, LLC, a registered investment advisor. Integrated Partners does not provide legal, tax, mortgage, advice, or services. Please consult your legal tax advisor regarding your specific situation. Past performance is no guarantee of future results. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that the strategies promoted will be successful.
Compound Growth with Wheeler and Colin. Sponsored by Ko-Fi Advisors. Reach out today. Yay!